Time for our three-stock lunch, and today we're sipping on some big movers, and not all of them are banks. Uber is surging with other gig economy names after a California court declared they can keep classifying drivers as contractors. JetBlue higher after boosting its revenue outlook, and JP rallying with the other banks today. Here to help us trade all three is Shelby McFadden. She's senior analyst at Motley Fool Asset Management. Great to see you, Shelby. Let's start with Uber. Would you be a buyer here?
You know, when it comes to Uber, I'm going to go ahead and hold. And that comes down to the competitive advantage and economic situation, both of which we use to assess quality at Motley Fool Asset Management. So even though I'm not one to make a habit of trading directly on policy or rulings or legislations, it's important to understand how this affects the P&L on a go-forward basis. So without having to expand their operational expenditure in the form of increased benefits for drivers, were they to be classified as employees, there's now an elimination of not only 100 million plus in explicit costs, but also a potential upgrade in their competitive standing, along with Lyft in that whole industry. So there is a little bit of a battle won there, but what keeps me at a hold is the fact that I'm not quite sure that the growing pains are done and that this is going to be the end of these sort of labor-related snafus for Uber. So it's a hold for me.
Especially if unionization is now easier.
Shelby, let's move on to a second company that also has had recently its interactions, shall we say, with government, and that is JetBlue.
Sure. So JetBlue is also a hold, and that comes down to the fact that they are able to sort of deliver on a value proposition in an unfavorable macro environment, not just for consumers, but for their own operations. And, you know, we know that, as you said, they've bumped up that Q1 outlook, and they are potentially positioned to gain from increased share of leisure travel compared to business travel. But they are still up against that fuel cost. In the case that they're able to go ahead and capture more volume of customers because folks are squeezed and they're price sensitive, and then they can go ahead and retain those volumes, then they may have an opportunity to go ahead and pass on price when those jet fuel prices start to eat at margins. But because of all those moving pieces, it's a hold.
Let's then get to the banks, Shelby. You don't have to weigh in on all of them, but what about JP?
So JP is going to be a buy, and that comes down to the age-old tale of a flight to quality. So, you know, we find that quality is a bit sector agnostic. You can find it in a lot of places. And oftentimes there's still going to be a standout, even when an entire group has seemingly fallen into the rubble. And JP, I think, is a really clear example of that. In light of recent events, we do know that there's going to be a stream of depositors looking for a new place to position their cash and their assets. And we know that it's very likely that some smaller regional banks are going to be up against regulation, and then, of course, the costs of that regulation. And so when we look when we look at some of those larger stalwarts, it seems a bit more dependable in this kind of time. And that's why it would be a buy for me.
Very good. Shelby, thanks so much for your time. We appreciate it today.